Suppose OMCs, that's oil marketing companies, IOCL, BPCL, HPCL, all with deep knocks expected. Paint companies, crude is an important component for them. Crude prices could go anywhere and have already spiked. So you're seeing Berger Paints there with the deepest cut in the pre-open session. Remember, the opening rates are yet to come in just about 4.5 minutes. Aviation stocks, Indigo, SpiceJet, seeing some pain. Hotel stocks as well. Let's look at what hotel stocks are doing. Indian Hotels, EIH, Lemon Tree Hotels among them. And a lot of others will also see some pain, isn't it?
Yeah, I mean, your travel proxy firms like Yatra, Ixigo, Ease My Trip, a few of the names, TBO Tech and Thomas Cook are also in focus on the back of this. There you're seeing these kind of cuts coming in. Now, metal stocks, the play is going to be what happens to the dollar. If there is pressure there, that's when you will see. But right now, I don't think so anything's holding water. Lloyds Metal, Tata Steel, Jindal Steel, SAIL, Vedanta, all of them have been in focus as well. Your specialty chemical companies are in focus. Sun Pharma, with the exposure that they have in terms of Israel, and L&T. That's going to be another one because the order book in terms of
fairly high exposure.
Very high.
If I look at Gulf exposed companies, then
L&T.
Sobha, L&T, one of the KRBL and L&T Foods, LT Foods also, those basmati exporters also might be seeing some pain this morning. I'm talking about LT Foods and KRBL. Yeah, there you go, 5.5% knock. LT Foods is 8.5%. Pre-open rates, these are. We'll see the opening rates in a bit.
Yeah, so the numbers wise, as per that Jeffrey's note, L&T was 25% and 40% EPC order book. Nugent Software, 30% of revenues from the Middle East. From the West Asia nations. And other companies with meaningful exposure, about 5 to 10% of revenue exposure include consumer companies like Dabur and Titan and pharma companies like Ajanta Pharma, Biocon and Cipla. Interestingly, while hospitals would be considered to be the safe haven, 8 to 10% of the revenue comes from international patients, which a lot of them are GCC clients as well.
Gulf,
They are Gulf
from
clients
the
as well.
Gulf. So
major hospital chains too.
Yeah. Anything that would be a candidate to buy with the hope that things will ease up, the whole Gulf Connect will ease up sooner or later. Parag, anything that you would pick at this point?
Yeah, so for example, I saw just Ajanta Pharma is down 5.5%. They have reported good numbers, the commentary is very good, and I suppose pharma will eventually, pharma to log kharidenge na. So the point is that if that falls so much, and if it continues to extend its fall, I think that stock in the affected due to Middle East and West Asia problems, that looks, even Dabur I saw at 500, I think it is not very high portion of their revenues. Of course, it is one of the out of the international business, Middle East is a major one. But I think all those things, like these are required things, right? Pharma or FMCG. If those kind of companies fall, then definitely that will be a good opportunity to buy.
Okay. What about Kalyan Jewelers as well is what I want to add, because 12% of their total revenues comes in from Dubai. I think 50 or 60 stores is what they operate there. I think Neeraj mentioned Titan as well. So if you have to look at these two jewelry stocks, anything on the charts?
I would avoid these, Titan perhaps, but I still prefer Thangamil Jewelers, although this is also opening gap down with the rest of the stocks. And honestly, I think, the pre-opening and the rates at which a lot of stocks are, this is more like what everyone was anticipating, not the 170, 180 point gap down, right?
You think we're opening 400-500 points down?
I have a feeling we might recover. I have a feeling we might recover from these levels. It's just that if we opened 150 points or 180 points lower and then went to 500 points lower, that'll be more painful. From here on, there's a possibility that we could recover a bit more.
And where is that recovery coming from? Do you think defense, companies are going to lead that recovery? Because you have hardly anything in the green right now.
Yeah, and it could stay like that for maybe initial few minutes and then we see where it goes. I think banking could lead, that rally because HDFC, ICICI are already beaten down quite a bit. Maybe some stability there. Reliance is one candidate which was already beaten down, so some stability there. PSU banks could see some profit booking because overheating, but I think Reliance and, your financial pack could perhaps see some sort of recovery and stability.
By the way, MCX is, I believe, not doing too badly. And remember, viewers, for one disclaimer, for all the names that are being mentioned as stocks which could be considered as well. Please do your own due diligence. The time horizon and the risk appetite of experts suggesting those stocks may be very different from what your time horizon might be. So please keep that in mind. And also remember, 2% a gash. 2% gash is really not alarming. It's just that the last 12 months have spoiled us for not seeing too many days with such sharp cuts. But let's wait and watch. Do we recover a little bit from this 500-point opening downtick that the pre-open rate was suggesting? Let's wait and watch. This is how we are starting off this Monday morning. 1.8 or 1.5%. Now let's wait. It seems that there is a bit of a recovery from that opening tick, but let's give it some time and see how it does. I mean, don't even look at the market breadth. The advanced decline ratio has no meaning, but the Nifty is just about 1% down. It is not 2% down. Let's see though. Let the first 5 minutes settle down. Banks 0.8%. Mid caps are down 1.6%. You can see it here. And the small cap index will come up on your screen. That will also be down 2.5%. Usually, the mid cap and the small caps tend to fall a bit more during such times. The index is still about 1% lower. Let's get the heat map up on the screen. It shows you the 50 stocks on the Nifty and how they are doing. Very few winners and a lot of losers. I'll start with the winners. ONGC is up 3.5% because oil prices have gone up, and typically the likes of ONGC and Oil India, which are the upstream oil companies, tend to do well because higher oil prices benefit them. BEL, a defense name, doing okay. Pharma, Parag Thakkar was talking about it, up about 1%. So Pharma might be the defensive bet today. Hindalco, again a metal name. Metals would probably rally, and that's why Hindalco too doing okay. Banks are not doing too badly. You have Axis, ICICI and Kotak. Three big names, less than 1% down. What is down though? Interglobe Aviation, clear impact. Middle Eastern flight revenue gone, and crude price uptick means higher costs. So therefore, Indigo corrects. Eternal corrects, interestingly, 4%. I think Middle Eastern operations as well, but other factors too. L&T, Middle Eastern exposure for sure. Adani Ports, one would presume that some of that cargo movement for the near term might be impacted, and that's why that stock is down 3.5%. And then Tata Motors, Maruti, etc. So maybe the consumer sentiment impact coming in, because discretionary and staples, most form of consumption, also seems to be down, because you also see Nestle and Asian Paints down in trade. So that's the long and short of it. Fair degree of corrective move, not quite 2%, but not 1% either, about 1.5% or thereabouts. So yes, starting off weak.
Look at the India VIX. Up about, spiking up about 15% right now. So that's going to tell you about the nervousness in the market. No point pulling up Nifty contributors because everything is on one side. This is a seesaw with nothing really to lift. But let's just quickly look at the Nifty contributors before we move to what's happening in the broader markets. And, the kind of pain there, it's these lone rangers really, which is trying to prop up the markets, everything else, and really the heavyweights there that are hurting. The flip side of what's going to happen with high crude prices playing out on RIL as well this morning. Let's look at the broader markets, the mid cap and the small cap. It's very likely you're going to see more pain there. Nearly 2% down on the Nifty Midcap 150, the small cap 2.5% down. And that's really where some of that excitement goes off. The advanced decline ratio here at the bottom is also telling you about how skewed and bearish the markets are right now. Let's pull up the sectoral heat map. I doubt you're going to see anything in the green. Okay, you have India defense in the green, and this is what we've been telling you. As the world gets more and more uncertain, it's defense stocks which are going to see some up move, and that's why you have that sector about 0.5% up. We'll pull up the internals in just a minute. But the fact that the small cap 250 is the biggest loser, I think, is a little concerning. Realty stocks also, because more and more Indian companies now have exposure to the Middle East, to West Asia, and that's why you're seeing some pain over there. But across the board, it is weak. Let's talk about specific stocks, and most of them will end up being in the red. I'm talking about Sobha Realty first. They have business in Dubai, so 2.5% down. But as Neeraj has explained, a lot of that business in Dubai is from their family office. Nevertheless, you'll have some sentimental impact. Fino Payments, the MD and CEO has been arrested. There has been some kind of an explanation by the CFO, who's now the interim leader. Street is not buying it, about 8% down. Crude impact. Just going through a list of some of those things, HPCL, BPCL, IOC, all of them. These are the ones where their margins get squeezed as crude prices go up. That's why these companies are all seeing that pain. IOC 4.5% down, but ONGC, Oil India, it's the reverse, right? It's good for them if prices go up. Indigo, again reiterating how much that is hurting. Same for tire companies, right? Seat, Apollo Tires, let's look at what's happened to them. Their expenses go up as crude prices go up. That's why 3.5% up there. Let's look at Muthoot and Hind Zinc. Silver, gold prices are up. Are you seeing a positive impact? Yes, you are. So 1%, between 1 and 2% up on both those counters. Some more companies with West Asia exposure. We spoke about Larsen & Toubro, but also LT Foods, exporters of basmati rice, Newgen, Dabur. These are companies which have fair bit of exposure in the region, and which is why you're seeing some of their stocks go down today. Kalyan Jewellers also, if we can add to that list and see what's happening there, because they also now have stores in the region. So you will see some pain in some of those counters. It's very unexpected reaction, I would say, here. On expected lines. Anything with West Asia exposure, crude exposure is going up. Difficult to find safe haven stocks this morning.
Absolutely difficult to find safe haven options, and the obvious ones are seeing some bit of pressure. You talk about all the shipping names as well, from a GE Shipping to any of them trading under pressure as we speak right now. Travel proxies that we mentioned earlier, you have Yatra, Exigo, Ease My Trip, TBO Tech, RateGain, BLS International as well. All of these are seeing cuts in that range of 2 to 8% in today's session. BLS International also 3.5% downtick coming in there. We've spoken about gold financiers, jewelry stocks already. Let's just look at hotel companies, Indian Hotels, EIH, Lemon Tree Hotels. If any impact coming in on any of these hotel plays, I mean, not a major cut, I mean, barely 1.5%, but it's your aviation stocks, your travel proxies, which are under pressure, your gold financiers, which are seeing some bit of a safe haven bet in today's session. Jewelry linked names again in focus, metal stocks in focus as well. Let me come to you, Parag Bhai. In terms of, gold and silver, we've had these conversations in the past as well, but as Tamanna was mentioning, do you think any of these plays could be a safe haven bet as of now?
No, it can be, and now the prices have also corrected, really, at least for stocks like Muthoot and all. The stocks prices have corrected around 15% or so. So it might continue, and with this risk premium increasing more and more due to this thing. But I think, see, in my view, this will settle down over next 3 to 4 weeks. And then you don't want to end up having something bought at a peak, and after that the situation cools off, right? So basically I would not go there in that space, metal space, at least right now.
Okay, gentlemen, we will leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time this morning. Let's welcome in our next guest, Manpreet Gill, CIO of Africa, Middle East and Europe at Standard Chartered, who joins us right now on the show. Well, he's at the epicenter of it all, literally and figuratively. Manpreet, I hope all is well in Dubai.
Good morning. Yes, no, all well at our end. But obviously, as we wake up to Monday morning, I think the focus shifting away from just the region, of course, to the market impact as well. And you've seen that's something we've been thinking about a lot as well.
Yeah. So Manpreet, I read your note, right? And you clearly saying this, that watching oil prices closely, that's the first thing that came out on the note. And it's clear that that is the thing. Just the point that oil prices started off with a large flare up and then cooled off almost immediately, right? In a matter of 24 months, they lost nearly 60-65% of their peak of the last 24 to 48 hours. Is that telling you a story, or is it too early to call a story?
So I think it's partly about two factors here, right? I think one is, let's not forget that when you look at the pattern of oil prices, we've seen oil prices price in a bit of a risk premium very gradually since the start of the year. So we're not our starting point has not been one of complete sort of non-pricing of the risks. So this has been building for some time. And second is, yes, at the moment, in a rapidly changing situation, I think there is obviously markets trying to achieve a balance between what the headlines sort of tell us from a geopolitical perspective and the fact that we're dealing with an oil market that is still very, very oversupplied at a global level. So obviously something we need to keep a close watch on. It's a situation that can change at short notice. But that is also why we're quite focused on thinking through different types of scenarios rather than reacting in too knee-jerk a manner. It's natural for a bit of sentiment-driven jump. But we have seen this before, in the middle of 2025 as well. So I think it's important to keep a bit of a balance and look at it with a cool head here.
Manpreet, good morning. Hiral on this side. We're talking about, a temporary surge in crude. Now, whether it sustains at higher levels or not is anyone's guess. But in case this is a temporary surge that we are seeing right now, what should the equity strategy then look like if someone wants to hedge against this temporary surge?
I think, a temporary surge is one where I agree with you. Our preferred approach would be to put a few hedges in place. And there are a couple of different ways to do it, right? Number one is to look for asset classes that are highly correlated to oil prices. The answer will be a little bit different. Obviously, what's available, provides that sort of hedge in onshore markets will be different to global markets. Globally, for example, we've looked at, US energy sector as one